here on the call, there's a theme over the last year, opening stocks, travel stocks. When we start to get back to some semblance of normal, well, two of the biggest names in that travel sector reported today. Qantas and Flight Centre dropped their results. First, Qantas reporting full year net loss narrowing on a year earlier, coming in at $1.7 billion. Statutory loss, $2.3 billion. Still ugly figure as the grounding of its international fleet continues to dent profits. Stripping out some of the one-off items, earnings came in $410 million, near the bottom end of the company's guidance, but in line with a lot of forecasts. On the pandemic, the company saw $12 billion stripped out of revenue for the last financial year. Wow. And forecasts by the end of this calendar year, COVID will have cost the company $20 billion in revenue. Looking ahead, the airline's expecting to restart international services at the end of this calendar year, with flying in the first half of next year to be around 15% of pre-COVID levels. Domestically, Qantas expects to see a surge in domestic travel if we reach those critical vaccination targets. Flight Centre, meantime, reporting a $507 million loss in line with guidance. Total transaction values coming in at just under $4 billion, with the second half providing a big boost. Company noting the loss of JobKeeper hit its bottom line hard, but the ongoing vaccine rollout is assisting a return to normal trading conditions in the medium term. Graham Turner, the chief executive and founder, saying the company continues to target a return to profitability for leisure and corporate travel in fiscal 2022. Mathan, what did you think of the results from both?
Oh, look, it's an ugly macro. Everyone knows that. But I think the turnaround story, again, we were positive on the travelling stocks. And then when the New South Wales cluster started, we actually got out of the travel stocks because once a cluster starts, they tend to go on and on. And we're seeing that now. So it's come back. Look, it's a tough one. Even Warren Buffett didn't want to get into the airlines, and then he got into the airlines, and then he lost money, and then he got out. That just tells you how hard it is to invest in airlines. Qantas is probably one of the better ones in the world, but look, it's going to take a bit of time. Look, the timetable at the moment is end of this year. I think it'll be longer than that. The sentiment will start to improve gradually, but it'll take time. So you're not going to get there probably till 2020, in the back half of 2022. So it's still a long way away. Look, they got huge handouts that's helped them last year. It's probably not going to be around. So in that context, things are going to be hard. Flight Centre has one thing working for it. It's a massively shorted stock. So you've seen some decent bounce back in the last couple of days. It's just short covering. So you'll get that pop. So that's the advantage with Flight Centre. But again, Flight Centre, it'll take time to recover. The reality is the vaccine boost that the developed markets are getting will not hit the underdeveloped markets for a while. So if you're thinking of where the third world countries and all the main transport locations are going to be, those things will take a lot longer than what people think. So again, you needed the vaccine play to go everywhere fast and quickly. That doesn't look like what is going to happen. We're looking at booster shots in next year. So I think you will get an open up thematic, but there are much better stocks to play the open up thematic than just airline and travel, because those things will go on and off every time there's a cluster and every time there's cases break out.
Okay, so you wouldn't get into either of them at the moment?
No, look, look, Qantas is a good asset play over the long term, but you've got to have a multi-year approach. It could go lower in the next year. So it just, for me, the macro doesn't stack up yet.
Yep, okay. Dawesy, we've got you back. What do you think of the result? I was amazed at a couple of things. Qantas Freight shooting the lights out sort of reminds you it's not just bums on seats, it's the cargo underneath. Loyalty is still generating a fair bit of cash, and 95% of its domestic flights at the moment are cash positive.
Well, it was always that domestic side of things that was doing really well for Qantas, and basically they had a lot of that stuff already sort of baked into the numbers, as it were. So I think Alan Joyce is right to sort of come out to the market and say, look, by December we're going to get things moving again, and we're going to do that. I mean, he has to say that. He doesn't know, the government doesn't know, and nobody knows when this thing's going to happen. He did say one of the big uncertainties is whether fully vaccinated travellers will need to quarantine in hotels or be allowed to quarantine at home when they return to Australia. Obviously, the current policy, 14-day hotel quarantine, will result in a low demand for international travellers. So that's something that, you know, when we get to this stage, okay, we're going to open up, but how are we going to open up and what's going to happen? If I was pushed to look for a stock, I'd say Qantas would be the one I'd look at. I don't like Flight Centre. It's been a tough stock for many people, and as rightly pointed out, you know, this thing will come off very quickly if we come into another snap lockdown.
Right. Okay. So what would you have Qantas as more of a hold there than?
No, look, I've got clients who hold Qantas and we haven't sold it. So, you know, with this price action over the last 3 days, I'd probably wait till the dust settles a little bit for a buy. So for me, it's a hold and it's a no for Flight Centre.
Okay.